Here's what's coming up on Retirement Talk with Sandy Morris.
What will be your biggest expense in retirement? Will it be healthcare costs, long-term care costs, or will it be your mortgage? It's none of these actually. Your biggest expense will likely be taxes during your retirement. Hi, I'm Sandy Morris, and thank you so much for joining us here today. Chances are you're ignoring the one thing that could have the biggest impact on your retirement, and it's taxes. And most people think they don't have any control over how much taxes they pay during their retirement years. But you know what? They're wrong. You actually have more control over how much you pay in taxes during your retirement than you do in any other time in your life. So coming up on today's show, I'm going to reveal to you the 4 retirement tax traps that could needlessly cost you thousands of dollars, and some little known strategies that could help you keep more of your money in your pocket.
She's a published author, television talk show host, and president of Sandy Morris Financial right here in Tampa. Sandy, how are you today?
I'm awesome. How about you?
Great. We have a wonderful program today. In fact, we're talking about the 4 retirement tax traps that could needlessly cost you thousands of dollars. Most people don't know it. They'll have to pay taxes on their Social Security benefits, but they're in for a wake-up call. Social Security remains to be one of the most critical pillars of retirement planning. This is the foundation piece, Sandy, for your income plan.
You know, Mark, most people don't even realize that between your employer and your Social Security benefits, you've contributed as much as 12.4% to every paycheck to Social Security. That goes back to when you were bagging groceries, when you were like 12 years old.
Let's see, 34 years. That's a 12.4. That's a whole lot of coin right there.
That's a lot of coin. And think about this. You've been doing this since the day you got your first paycheck. So that makes your 401k look like chump change. We're talking about a lot of money that you have at stake here. And if you don't take this income from these accounts, you'll be costing yourself thousands and thousands over your retirement years.
And Sandy, if you rely on some one-size-fits-all strategy or traditional rule of thumb, you could trigger an avalanche of taxes, double your Medicare premiums, and cause you to forfeit additional benefits that are rightfully yours.
Yes, and most people do, Mark. We find that all the time in the office when people come in. They have no idea that this is even a reality for them. You could pay taxes on as much as 85% of your Social Security benefits. So the money that you were counting on to help support your retirement income could only be a fraction of what you thought it was going to be.
Sandy, it's amazing, 85%. And I know we have people listening today that say that's impossible. I paid into this program. I've already paid the taxes. Now I'm going to have to pay taxes again on that 12.4% that's been put away from me. Amazing, 85%.
Well, Mark, the thing is that you don't have to pay tax on your Social Security if you don't disqualify yourself. But most people disqualify themselves.
And they don't even know they're doing it.
Yes. So between 50 and 85%. So 85%, that's the number. According to the IRS, when you claim your Social Security benefits, you could get taxed on as much as 85% of those benefits.
So the money you were counting on to help fund your retirement could be but a small fraction of what you thought it was going to be, Sandy.
But you can dramatically reduce that tax bill, that huge tax bill, and keep that money for yourself. Let us show you how with a customized Social Security analysis. There's no cost. You've got nothing to lose. If you've saved at least $250,000 for retirement, be one of the first 10 callers right now to get your customized Social Security analysis. Call right now at 813-513-0011. Don't leave any money on the table. Don't leave tens of thousands of dollars in Social Security benefits on the table. Call us right now at 813-513-0011. Again, that's 813-513-0011.
Hey, Sandy, and after the break, we're going to be talking about a retirement tax trap that you won't see coming. That could cost you thousands of dollars every single year. Don't go anywhere. We'll be right back. You're watching Retirement Talk with Sandy Morris, Tampa Bay's retirement television.
You're on the back nine heading for the clubhouse. Your dreams of spending time with family and enjoying retirement are just within reach. What happens if you end up in the rough? In these uncertain times, it's crucial to be prepared with sound advice.
Sandy Morris Financial is one of Florida's premier retirement income planning firms. For a complimentary consultation, call 813-513-0011. Sandy Morris Financial, helping you create a winning strategy.
Having no clear retirement plan is a mistake I see a lot in my financial planning office when I meet with someone new. It's extremely rare that someone comes in and has a clearly defined income plan for his or her retirement. So if you don't have a clear retirement plan, be one of the first 5 callers and you'll receive a free complete planning review. There's no obligation and no cost. If you've saved at least $250,000 in your retirement, here's what you'll receive: a free report to sort through your current advisor's costs, a tailor-made plan to guard your investments, a tax analysis to reduce the liability and increase the cash flow, and a custom income plan to boost your retirement. Plus, you'll receive a budget assessment to help manage your cash flow. So call now for your free no-obligation financial review. And remember, you only retire once, so let's get it right the first time.
You're watching Retirement Talk with Sandy Morris, Tampa Bay's retirement television. Sandy, Benjamin Franklin said there are 2 certainties in life, death and taxes. But what Ben didn't know is that today you have more control over how much you pay in taxes in retirement than at any other time in your life. Welcome back. I'm Mark Gaffney with Sandy Morris, and today we're talking about the 4 retirement tax traps that can needlessly cost you thousands of dollars. Sandy, contributing your money to an IRA, 401k, or other type of retirement account is easy, but getting your money out, is a totally different story, isn't it?
It's a different story, Mark. It's a completely different story. And what most people don't realize is if you don't do that and have some kind of strategy for doing that, it's just taxes, taxes, taxes.
It's like we were saying in the previous segment.
You can't get off that gerbil wheel of taxes.
85% of your Social Security could be taxed. Why? There are things that you can do to make sure that doesn't happen.
There are some things that you can do. If you've saved $500,000 in an IRA or a 401k, remember, you still have to pay taxes on that money when you withdraw it. So every dollar that you take out, Uncle Sam's going to get a piece of that. It's going to get 10 cents, 20 cents, 30 cents. Just think about that when you go to take that money out. Only maybe 75% or 80% of that's even yours. So most people will pay through the nose in taxes during retirement, but there's a small savvy few that will pay far less in taxes than anyone else. But when you've reached 70 and a half, you're legally required to start withdrawing your money from your 401k and your IRA. And if you don't do this, you can get taxed. Mark, there's up to 50% tax and penalties and fees if you miss taking the money from your IRA when you're in your 70s. Did you know that?
And everyone loves paying those RMDs. Oh, we can't wait for RMDs to pay that much more to Uncle Sam.
Well, the thing with RMDs is that every year you have to take out more and more and more. And what surprises me is most people think that there's just a percentage, 10% or whatever. I can't tell you how many people say, oh, there's 10% that you can take 10% out of your IRAs for your RMDs. It's actually only 3.62 the first year, but it goes up a little bit every year after that.
And if you hate paying taxes now, Sandy, just wait till you're 70. As soon as you turn 70, required minimum distributions will force you to withdraw money from your IRA, 401k, or other retirement accounts, whether you like it or not. This could trigger an avalanche of taxes, and every year could get worse and worse.
You know, the way to avoid this, Mark, is by creating a RMD strategy on how you're going to take your minimum required distributions out of your accounts. But you have to do that now, because the longer you wait, the less options that you have. So for those of you that are like around 59 and a half and you can now use the money in your 401k that you're still working, or old 401ks. By the way, if you're 59 and a half or older, you can do what's called an in-service partial rollover and roll that money, a portion of that, out of your 401k. Keep contributing, keep having the company match, but you can start it as early as 59 and a half. So learn some little-known strategies that could help you save thousands of dollars when you withdraw your money from your IRAs and your 401ks in retirement. There's no cost. You've got nothing to lose. If you've saved at least $250,000 in your retirement, if you'll be one of the first 10 callers right now to give us a call and schedule your initial analysis, call us right now. Call 813-513-0011. The truth is that many people will pay through the nose in taxes during their retirement, but a smart, savvy few will legally pay far less in taxes than you could ever imagine. Just call us now, 813-513-0011. That's 813-513-0011. Call right now while the phone lines are open.
And Sandy, coming up next, a little known retirement tax that could cost you tens of thousands of dollars. Hey, don't go away. We'll be right back. You're watching Retirement Talk with Sandy Morris, Tampa Bay's retirement television.
It's your retirement. How will you live it? How will you be remembered?
Will you be able to send me an invitation?
Will you be there for my ball games?
Will you teach me your values? You'll be able to play with me.
Oh, help me go to college. How will I remember you?
Have the retirement you dream about. SandyMorrisFinancial.com.
Having no clear retirement plan is a mistake I see a lot in my financial planning office when I meet with someone new. It's extremely rare that someone comes in and has a clearly defined income plan for his or her retirement. So if you don't have a clear retirement plan, be one of the first 5 callers and you'll receive a free complete planning review. There's no obligation and no cost. If you've saved at least $250,000 in your retirement, here's what you'll receive: a free report to sort through your current advisor's costs, a tailor-made plan to guard your investments, a tax analysis to reduce the liability and increase the cash flow, and a custom income plan to boost your retirement. Plus, you'll receive a budget assessment to help manage your cash flow. So call now for your free no-obligation financial review. And remember, you only retire once, so let's get it right the first time.
You're watching Retirement Talk with Sandy Morris, Tampa Bay's retirement television. So Sandy, what do you think will be your biggest expense in retirement? Will it be health care, long-term care, or your mortgage? It's actually none of these. Your biggest expense will likely be taxes. Welcome back. I'm Mark Gaffney with Sandy Morris, and today we're talking about 4 retirement tax traps that could needlessly cost you tens of thousands of dollars. Sandy, you hear a lot about asset allocation and diversification, but what is tax diversification?
Mark, tax diversification is one of the most underrated financial planning strategies. From recent Kiplinger report article, you don't want to own too many assets that are taxed the same way or at the same time. This accentuates the significance of tax diversification. In my experience, it's one of the most underrated financial planning concepts. In fact,
we were just talking about it on a previous show.
It needs to be. It's number one when you come in our office. The first place we start is taxes, because if you don't have your accounts set up properly, meaning the pre-tax accounts and the after-tax accounts, the tax consequence on when you withdraw that money determines what kind of investment account that you actually put that in. So most people, they just look at risk and making money and growing their money. And what they don't realize is it doesn't matter how much you grow it to. If you have some scattered, unorganized, unresearched way of taking your money out, it really doesn't matter how much you grow it to. All you're doing is paying more in taxes.
Like my father always says, it's not how much you make, it's how much you keep, right?
That's right, and it's so simple nowadays to do.
And it could be devastating. You've done such a great job accumulating that nest egg, right?
Yeah.
And now you've made some really bad tax decisions, and you've given it all to Uncle Sam.
Yes, yes.
There are three basic tax categories to diversify, Sandy. What are they?
Well, first one is what most people are used to, and that means that you're taxed always. Brokerage accounts, checking accounts, your savings accounts, you pay tax on the dividends of those accounts, interest, capital gains, and capital gains now since we've had these changes. That's really a gotcha. Then you have the second kind, which is called taxed later. And these would be your 401ks, your traditional IRAs, 403bs, 457s, those kinds of accounts, real estate or hard assets. Those are the ones that are taxed later. Those are the ones that will trip you up if you're not careful. Also, there's taxed rarely, okay, or never taxed. Those are your Roth IRAs, interest from municipal bonds, although, Mark, did you know that interest from municipal bonds actually goes into the formula when you calculate how much you're going to pay on your Social Security?
See, I thought that was tax-free. I thought that didn't affect that.
If it shows up on your tax return, that's why you have to be so careful when you're retired to not have anything show up on your tax return. If it shows up there, I don't care what it is, Social Security counts it toward you being disqualified.
I'm going to bring up another point too, and we talked about this in a previous show, but with our new administration, the Trump administration, the rules have changed significantly, and you need to know today, in particular, if you're going to take capital gains in 2018, there are some things you need to be aware of, right?
Yes, we've had several people that have gotten really hit hard with those capital gains tax because it goes by your income now. But those Roths and IRAs, municipal bonds, all of that, municipal bonds go into when it comes to taxing your Social Security. Now, there are certain type of life insurance policies now that are not taxable when you take money out of those. It's not even reported on your tax return. So if you've saved at least $500,000 in an IRA, 401k, or any account, okay, you know it's not really $500,000 because you still have to pay tax on that, right?
Uncle Sam gets his piece.
So here's some things that will shock you though. Many people pay through the nose in taxes when they withdraw this money from their retirement accounts. But there are, Mark, a savvy few, okay? Those ones that take responsibility, that make the calls to come in to say, hey, what is it that I'm not aware of? Those are the people, those are the savvy few that will legally pay far less taxes in the future. Let us prove how you can potentially save tens of thousands of dollars in taxes. It all starts with a simple conversation with us. If you've saved $250,000, be one of the first 10 callers right now to call us to schedule your initial analysis now. It's 813-513-0011. You're going to want to call 813-513-0011. It's your choice. You can pay the IRS or you can keep this money for yourself in your own accounts. 813-513-0011. Again, one more time, you ready? 813-513-0011. Call us now.
Sandy, imagine paying taxes on your hard-earned money, and then it gets taxed again by the government when you pass away. Hey, we're going to learn how you could avoid doing this when we come back. Don't go anywhere. We got a lot of great stuff to come. You're watching Retirement Talk with Sandy Morris, Tampa Bay's retirement television.
Life, a series of moments. A touch, a look, a laugh. Successful people. It might not be superior imagination. It just might be superior retirement planning. Imagine what's next. Plan today, own tomorrow.
Call Sandy Morris Financial at 813-513-0011.
Having no clear retirement plan is a mistake I see a lot in my financial planning office when I meet with someone new. It's extremely rare that someone comes in and has a clearly defined income plan for his or her retirement. So if you don't have a clear retirement plan, be one of the first 5 callers and you'll receive a free complete planning review. There's no obligation and no cost. If you've saved at least $250,000 in your retirement, here's what you'll receive. A free report to sort through your current advisor's costs, a tailor-made plan to guard your investments, a tax analysis to reduce the liability and increase the cash flow, and a custom income plan to boost your retirement. Plus, you'll receive a budget assessment to help manage your cash flow. So call now for your free no-obligation financial review. And remember, you only retire once, so let's get it right the first time.
You're watching Retirement Talk with Sandy Morris, Tampa Bay's retirement television. Are you overpaying your taxes every year? It's been reported that Americans will overpay their taxes to the tune of $1 billion every single year. Sandy, that's $1 billion with a B.
I know.
Hey, I'm Mark Gaffney with Sandy Morris, and today we're talking about the 4 retirement tax traps that could needlessly cost you thousands of dollars. Sandy, an estate plan is one of the most important things you can do for the people you love. Man, we see problems with that all the time. And you hear it in the news all the time. And if you don't take care of this, it could get ugly, can't it, Sandy?
If you don't have an estate plan, everything you own, including your house, your cars, all of your investments, everything could be tied up in courts for years, or even for a year, or even longer. I mean, I've got one couple right now that we're looking, I would say, and this is just, I'm not a lawyer, okay, but I can tell you probably at least a couple of years. So it could cost your estate thousands and thousands of dollars in probate and legal fees, and your estate could end up getting double taxed by the government. Why we erase what could be decades and decades of hard work and money and sacrifice simply because you don't have an estate plan. You know, Mark, I think in my 16 years of doing this, and myself, and you could probably attest to this too, I think people don't do that because they think it's really complicated and it's really expensive, but it's really not. An average trust, will, healthcare surrogate, power of attorney, all of those documents for an average person, just normal people like yourself, me and you, it really shouldn't take more than an hour and a half to 2 hours to have all of the information put together. You don't have to have all your documents. You don't have to come in with, all this information. All it takes basically is just a phone call with the attorney. And we even have it made it simple. We've got a form that they just fill out, and one of our attorneys will call and go over the phone with things. Every once in a while, if you're high net worth or if you've got businesses and things like that, it could get a little more complicated, but people literally take more time to plan dinner or to where they're going to go to dinner on the weekends or plan what they're going to do for the weekend than they do for their estate planning.
Sandy, on so many shows we've talked about when a family member passed away and they didn't have everything in order, they left a mess for their family.
They did, and it's
in particular
so
their
sad.
spouse.
Yes.
Yes. So I always do a call out to the gentleman: do not leave your spouse in a bad situation. Take that hour, take that 2 hours.
Yes.
Come and see Sandy. Get all those things worked out. Taxes could have a profound impact on your retirement. Remember, it's not what you make, it's what you keep. And you have more control over how much you pay in taxes in retirement than any other time in your life. Right, Sandy? It's true.
Absolutely.
This is the one time in your life where you have the most control in the taxes that you pay. Could you legally save thousands of dollars in taxes in retirement? Yes, you can, and we can prove it to you. There's no cost, so you've got nothing to lose. If you've saved $250,000 for retirement, our operators are standing by right now to take your call. 813-513-0011. What you could learn could literally save you tens of thousands of dollars, possibly more. That's 813-513-0011. And don't go anywhere. We've got a lot of great stuff to come. You're watching Retirement Talk with Sandy Morris, Tampa Bay's retirement television.
You're on the back nine heading for the clubhouse. Your dreams of spending time with family and enjoying retirement are just within reach. What happens if you end up in the rough? In these uncertain times, it's crucial to be prepared with sound advice.
Sandy Morris Financial is one of Florida's premier retirement income planning firms. For a complimentary consultation, call 813-513-0011. Sandy Morris Financial, helping you create a winning strategy.
You're watching Retirement Talk with Sandy Morris, Tampa Bay's retirement television.
I came from a small town in Kentucky called Wickliffe, Kentucky, and it was down by where the Ohio and the Mississippi River meet. There was maybe a population of 1,200 or 1,500 when I was small. Had one red light. We had no money when I was little. I've been gone from home since I was 17 years old, and I didn't have anybody to depend on. So I've had to make what I've made, and I know what it's like to not have money. I know what it's like to have it and lose it. And I know those feelings that people have and those fears. I can feel that when they come in my office. It is a lot of responsibility. These are life-altering decisions that people are making. They're giving you their money and they're trusting you to go put it somewhere to make sure that they're going to be safe and never run out of money as long as they live. And I guess I just did this naturally. And then when I really realized what I was doing, it was very humbling. All of my clients have my cell phone number, and literally I've said, if you are worried or something's keeping you up at night, I don't care if it's 1 o'clock in the morning, call me, because they need to have that certainty. And, you know, I think people put their faith and trust in people that they get a good gut feeling for, and they feel like relates to their own situation. And I think you just have to get somebody that speaks your language or gives you that good feeling that you know no matter what, you can always call them, pick up the phone and know what they're saying. They don't talk over your head. I've loved this business ever since I've gotten into it. I said when I found retirees and I got in this business, I found my people. The joy I get when I am able to help somebody feel safe or get certainty or get clarity, it's just the coolest thing. As long as they make a calculator big enough that I can see the numbers on it, I'm going to be doing what I do, because I can't imagine doing anything else. I love what I do.
You're watching Retirement Talk with Sandy Morris, Tampa Bay's retirement television.
You made it. Years of hard work, investing, planning, and now you're here. The long-awaited reward you spent a lifetime looking forward to. But what now? After years of growing a nest egg, now you may want to manage it. Use it to fund your dreams. Make it last as long as you need it. And leave some for those you love. So what do? Wall Street continues to be uncertain, and some conservative options have dropped through the floor. How do you maintain opportunities for growth and reduce risk of loss from market changes? That's where we come in. We are financial professionals. From investments and insurance products to tax reduction strategies and guaranteed retirement income you cannot outlive, provided by the claims-paying ability of insurance companies. You've worked a lifetime to get here. Let us help you enjoy it to the fullest. For a complimentary consultation, simply contact us today.
You're watching Retirement Talk with Sandy Morris, Tampa Bay's retirement television. Sandy, great show today. Had a lot of fun.
It was an awesome show.
A lot of great topics for people out there. Hey, listen, if you want more information about what we spoke about today, give us a call in the office or go to our website.
And remember, you only retire once, so let's get this right the first time.